Hi, welcome to the Market Alert for Thursday, the 11th of June 2015. Starting off in the 5-minute chart, you can see the market's reaction waiting for Carney to speak on Wednesday evening from the Mansion House speech, the annual speech. You can see the market stuck in a sideways range in the pre-market session, and then the market taking advantage of some positive news that was going to be released later in the evening, which I suspect some of it was actually leaked beforehand, and we see the market driving up with professional buying. We've got some selling pressure here, and then 3 more consecutive buying bars before we get the buy signal, PTP there, just above the 17,900 level there. You can see this order filled. It's a 24-point risk, and the market holds above the 17,900, then starts to move higher, eventually making its way to the scalp there for the 20 points. But if you notice on this occasion, the market fails to close 50% below any of these rising lows, including the one where the market goes through the scalp, and this is how the pattern continues all the way through up until we get to the 18,000 level once more, and we see some selling coming into the market. Huge volume on the selling there. That stops the market, what's known as stopping volume, and then the market trades sideways. So we see the market moving up 100 points from this first signal. However, had you have got out at the scalp area just below the 17,950, then you would have had 20 points. But like I always say, the psychological levels are the targets for the PTIs, unlike the PTPs and XXXs, because the market trades to these levels, as you can see, and I've seen over the last few months. But had you have got out and then re-entered the market, you can see there's another 20 points. But having stayed in because of the market trading to the next scalp levels, you can see once the market drives through with this PTI, then on to the next, then the selling comes in, and by this point, from the low to this high, just to show you the range for the day, psychological levels to the high, you've got 195 points there, just under 200 points where the market's actually moved. So having taken money off the table in the first part of the session, knowing that Carney is going to speak later on, as I've said recently, and continue to do so, if you've made money in the first part of the session, close down the software and go and find something else to do. Because as you see here, the market moves lower, then turns around and comes back up, so it takes this trade out. You get the money back on this trade, and then it's too late to trade any of these other ones, because it's close to the close and also the official time for Carney to actually speak. In the daily chart, you see a massive up bar for yesterday, but what you should notice about this is that the volume in the test bar, the bar the day before, is a lot higher than the price bar that we saw yesterday, even though the market traveled over 200 points plus. In the afternoon session, you can see that the volume is actually less. There's no green volume. You can also see that the market's coming off this already in the overnight session. This is not buying, this is purely a dead cat bounce, as it's known. Dead cats bounce, but they don't run off, so there's very unlikely to see any further upward momentum off this unless there's economic news, positive economic news, which will drive the market to do so. And speaking of which, today 3 p.m. we've only got business inventories out in the US at 3 p.m. and this is forecast to come out slightly better, but at the moment you can see the market's nowhere near the highs of yesterday. And finally, in the implied volatility, we've got 1363 for Tuesday. Wednesdays is 1235, nearly a full point drop there in the implied volatility, which you can see in the chart. And that's perfectly normal, as the underlying market was moved higher. Right, that's it for me for this morning. I will see you in tomorrow's Market Alert. Have a good day, and as ever, thanks for your support, very much appreciated, and also for watching. See you in the next one.